Is diving in the world of crypto a risk worth taking? Today we're unlocking the secrets of investing into cryptocurrencies, exploring the benefits that could reshape your financial future. But hold on, many say that crypto is dead. We're about to shatter the silence and uncover the truth. Stay tuned, because by the end of this video you'll have a clearer picture of the opportunities and the risks that come with this dynamic investment landscape. And what you're about to discover might just change your entire investment strategy. Let's start with the benefits of investing in crypto. Cryptocurrencies have gained attention for their potential to deliver high returns on investment. One of the most notable examples is Bitcoin. In its early years, the price of a single Bitcoin was just a fraction of a cent. And at its peak in 2021, it reached around $60,000. This staggering growth has generated substantial wealth for early adopters. To capitalize on the potential for high returns, it's crucial to conduct thorough research and stay informed about market trends. Diversification is key. Consider spreading your investment across different cryptos rather than putting all of your funds into one. Setting clear profit-taking goals and risk management strategies can help you make informed decisions in the volatile crypto market. Historical data reveals that while cryptocurrencies can offer significant returns, they also come with volatility. For instance, Bitcoin experienced multiple price corrections of over 30% during its upward trajectory. Understanding and preparing for these fluctuations is essential for navigating into the crypto space. And as a helpful resource, you can find an affiliate link for Binance in the video description. Utilizing reputable exchanges like Binance can provide a user-friendly platform with a variety of cryptocurrencies to choose from. Remember to do your due diligence and use secure practices when trading on any platform. The link is there for your convenience, but as always, make your choices that align with your research and comfort level. Cryptocurrencies operate on decentralized blockchain networks, providing users with a level of financial freedom and control over their assets that traditional finance systems often lack. Unlike traditional banks that act as intermediaries, blockchain technology allows for peer-to-peer transaction, reducing the need for third-party involvement. To leverage the benefits of decentralization, consider using cryptocurrency wallets that allow you to control your private keys. This ensures that you have direct ownership and access to your funds. Additionally, explore decentralized finance platforms that enable you to participate in financial activities like lending and borrowing without relying on traditional banks. The decentralized nature of cryptocurrencies is exemplified by the absence of a central authority. Bitcoin, the first and most well-known cryptocurrency, operates on a decentralized network of nodes worldwide. Decentralization contributes to the resilience and the security of the network. Understanding the principles of decentralization empowers you to navigate the crypto landscape with sense of autonomy and security. Embracing decentralized solutions can redefine how you interact with your finances, providing newfound freedom in the digital realm. One of the distinctive advantages of cryptocurrency markets is its availability 24 hours a day, 7 days a week. Unlike traditional stock markets that operate during specific hours, the crypto market is constantly active, allowing investors to buy or sell assets at any time. This around-the-clock accessibility is particularly beneficial for individuals with different time zones and varying schedules. To make the most of the 24/7 market, consider setting price alerts and utilizing trading platforms with mobile applications, such as Binance. This enables you to stay informed about market movements and seize opportunities, even when you're on the go. However, it's essential to strike a balance and prioritize healthy trading habits. avoiding excessive monitoring that may lead to impulsive decisions. Analyzing historical market data reveals that significant price movements and events can occur outside traditional trading hours. For instance, notable cryptocurrency price surges or corrections often happen during weekends or outside typical business hours. This underscores the importance of the 24/7 market accessibility for crypto investors. By embracing the continuous availability of the crypto market, you have the flexibility to engage in trading or investment activities whenever it aligns with your schedule. This accessibility is a powerful aspect of the crypto space that aligns with the fast-paced nature of the digital age. As there are some great benefits investing into crypto, it also holds some risks. While the potential of high returns is an enticing aspect of cryptocurrency investment, it comes hand in hand with a significant risk: volatility. For instance, Bitcoin, the flagship cryptocurrency, has witnessed price swings of over 10% in a single day. To navigate the risk of volatility, consider implementing risk management strategies. Setting stop-loss orders, diversifying your portfolio, and allocating only a portion of your overall investment to cryptocurrencies are practical steps. It's crucial to establish a risk tolerance level and avoid making emotional decisions in response to rapid market changes. Analyzing historical volatility indices, such as the Bitcoin Volatility Index, provides insights into the dynamic nature of cryptocurrency markets. Understanding past volatility patterns can help you anticipate potential market movements and make informed decisions. Volatility is an inherent characteristic of the crypto market. By acknowledging and preparing for this risk, you can approach cryptocurrency investment with a balanced perspective, ensuring that you are equipped to handle the rapid fluctuations that may occur. Cryptocurrencies operate in a regulatory landscape that is continually evolving and can vary significantly across jurisdictions. The lack of standardized regulations introduces an element for uncertainty that can impact the market and investor confidence. Regulatory developments such as proposed bans or restrictions on crypto activities can influence prices and create an unpredictable environment. Staying informed about regulatory updates is crucial for cryptocurrency investors. Regularly check for announcements from regulatory bodies and government agencies in the regions where you operate. Additionally, consider diversifying your investments across various cryptocurrencies and regions to mitigate the impact of regulatory changes in any single market. Historical events such as regulatory crackdowns in certain countries have led to market downturns. For example, when China announced a ban on initial coin offerings in 2017, it triggered a significant drop in cryptocurrency prices. Understanding the historical relationship between regulatory developments and market reactions can inform your risk management strategy. Navigating the landscape of regulatory uncertainty requires vigilance and adaptability. By staying informed and diversifying strategically, you can better position yourself to respond to regulatory changes and protect your investments in the face of evolving legal frameworks. Security is a paramount concern in crypto space, and investors face various risks related to the safety of their digital assets. Cryptocurrency exchanges and wallets are susceptible to hacking attempts, fraud, and other malicious activities. High-profile security breaches have occurred, leading to the loss of significant amounts of crypto. To improve security, prioritize using reputable and secure crypto exchanges. Implement two-factor authentication for your accounts and consider using hardware wallets, which are offline devices that provide an additional layer of protection. Regularly update your software and exercise caution when interacting with unknown or suspicious entities in the crypto space. I have added two of the best hardware wallets with great reviews you can buy on Amazon. They're in the description. Analyzing historical security breaches underscores the importance of proactive measures. Notable incidents such as the empty GOX hack in 2014, which resulted in the loss of over 850,000 bitcoins, highlight the vulnerabilities in the cryptocurrency system. Learning from these events can inform your security practices. Security concerns are an ongoing challenge in the cryptocurrency world. By adopting robust security practices and staying vigilant, you can mitigate the risks associated with potential security breaches and safeguard your digital assets. Remember, taking proactive measures is essential in the rapidly evolving landscape of digital finance. If you found this information valuable, give us a thumbs up and share your thoughts in the comments below. Are you currently invested into crypto, or is it something you're considering? Subscribe to Passion Wealth for more, and remember, knowledge is power, and in a world of crypto, it's the key to success. Until next time, happy investing!